Good evening. This is your girl Lynette from D.A.L.S Credit Solutions. This is Credit Tip Tuesday. How's everybody doing today? It is a 7:07 p.m. Eastern Standard Time, 6:07 p.m. Central Standard Time, and honestly, I don't know what time is it everywhere else, but hello, everybody. As you are tuning in, I have a co-host tonight that I am very excited about. We're going to talk credit and real estate, the dynamics, go deep, answer questions, ask all the questions. So I just want everybody, to type in where y'all calling, where y'all tuning in from, how's the weather, all that good stuff. Let me see here. Just hey, I have a co-host, my girl Linnell, the King Edwards. She will be joining me shortly. Just getting everybody in. Let's see here. Let me share it.
Hi,
Hey, the King has arrived.
how are you?
I'm doing well, waiting on you. How's everything going with you today?
Good, good, good.
Good. So this is my girl, Linnell. Give an introduction, Linnell, who you are and what you're about, baby girl.
Hello, everyone. So I am Linnell Edwards. I am a mortgage loan. I'm located in Atlanta, Georgia. I've been doing mortgages for quite some time. My background has always been in finance, and went from business loans to mortgage loans, and here I am today.
So we're going to dig deep today for everybody. A lot of people are, looking at, real estate during the pandemic or, post and prior pandemic. They want to get some, legal issues like far as what it is to buy a home, far as, what its importance on the credit, things of that nature, and, just, have some insight. So I wanted to ask you, like, what is the most important step, far as getting ready for that dream home, that actual closing of the deal of the mortgage?
So the most important step is going to be credit. It's always going to be credit because your credit is going to determine everything. It's going to determine your affordability. Your credit is going to determine what scores you get. Your credit is going to determine what programs you can get into. Your credit is everything. So that's the first initial step.
And I work with a lot of clients, that wants to be credit worthy to sign that deal, to close on that home. And a lot of clients, they're not certain about, which direction to go. So I always give the insight to make sure that you're not viewing certain platforms like Credit Karma and Credit Sesame that have vintage scores. So it's more so on a FICO score, have that actual scoring technique. So I always concentrate on the client's credit utilization and overall payment history. I know we have
Hmm.
5 components when it comes to, credit itself, but the most important are the payment history and the credit utilization. Can you,
Right.
explain why is that so important?
So your utilization is actually going to determine exactly how much you can afford. So able to you have to be able to know that you can't have high utilization and afford whatever you want to, um, based upon what your income is. So your payment history, I'm sorry, not your payment history, but your utilization is going to be a key factor. Oh,
Are we
can you hear me?
can everybody hear? Can somebody type to say if they can hear or not? Just put up a thumbs up or anything so we can continue. Let me see. We might have to start over. I think we got to start over. Let me see.
Okay.
I don't think nobody can hear. Let's see.
Can you hear me?
I can hear you. I wonder if
Okay.
anybody else can hear. Can anybody hear that's on?
Okay. So Jasmine says that she can hear.
Okay. Jasmine can hear.
Okay.
Everybody can hear? Okay. Okay. Everybody can
Okay.
hear. Let's roll.
So, all right. So to start over, the utilization is important because it's going to determine exactly how much you can afford. And your utilization also plays a key factor in your credit scoring model. Your utilization, just by simply paying down the correct credit cards, and I won't say all credit cards, but the correct credit cards,
That's
can
right.
actually increase your scores. It helps in determining exactly what your affordability is. Um, when it comes to the payment history, your payment history is everything because a lot of people don't realize when you get ready to purchase a home, we go more into what your credit score is. Sometimes you can have a 700 credit score and we're still not able to get an approval on you. And that's because we look at the payment history, we look at what's on the credit report, and our automated system is going to go by scorecard. So depending on what areas you score in, it's going to tell us whether we can approve you or not. So that is very important that you keep up with your utilization and your payment history.
And to piggyback off of what you said when you talked about the correct um, credit cards to pay. So what to elaborate that, to talk about that more, when you have a series of credit cards, 1, 10, whatever, whichever your oldest card is, because it has the credit age, that's the ones you need to concentrate on. Ensure that their credit utilization is between 2 and 9%. If you're using that in the abundance and you're showing a high utilization, it can almost reject you, correct? Len, from getting
Right.
that actual home. So you always, when look at the one that's the oldest credit card. That's the one that honestly determines the utilization. It trumps a lot. So when you have cards like from 2011, 12, 13, they're the ones you want to keep at the lowest utilization. Because if you don't, you'll see why you might see the 50, 60% utilization. Payment history
Mm-hmm.
also factors in that. The way you pay your credit cards is so important. I advise people to pay their credit cards every 2 weeks, 5 days after the invoice come out, 5 days before the date of the actual due date. With doing that, it shows revolving. You spend and you revolve. Not saying spend abundantly, but stay in between that 2 and 9%. So with a lot of people like that, they wonder which credit cards will help, build credit scores. It depends on where you at in the building world. So if you need, like I tell everybody, my first cards were uh, Capital One, Credit One, Discover Card, Finger Hut, and Bank of America. They were my first five cards, and I still have those cards to this day because of the credit age that it holds. And I still
Mm-hmm.
revolve each one of these cards because when you do this, it puts that 0.30%, which is allotted for that increase for your overall credit score, to give you that maximization each time FICO generates your score. So that's so important. Always, always go after the oldest cards. Yes, you might have newer cards, but you want to ensure that the older cards are getting are revolving as much as well. Because you see a lot of people, they get older cards and they graduate and go to the newer cards and they will leave the older cards dormant. That can do more harm than good. So you
Right.
always utilize each card you have. Each card you have.
Mm-hmm.
A lot of people, I want to ask you this because this is one of my favorite topics. When you go buy a house, a lot of people will and invest in trade lines, to build their actual credit score. Um, Elaborate on that for a minute because this is one of my favorites that I like to discuss.
So when it comes to trade lines, a lot of people will use trade lines to build their credit. But if you're building your credit for the purpose of purchasing a home, trade lines is not the best option. And the reason that is because we have specific guidelines that touch on trade lines. And let's say, for instance, you may be rebuilding your credit, you've opened up your own secured credit, and you've purchased 2 trade lines. Well, now you have more trade lines than you do with your regular credit. So because of that, we're going to ask you to remove those trade lines. And so we're going to find out what your true credit score is anyway in the process of building your credit. So you and with you losing that history, it could cause you to lose your home.
Yeah. So is oh, she went out. Oh, she's still talking. Can you hear me?
I can hear you. Yeah, can you hear
Okay.
me?
Yeah, I can hear you now. And what she's saying is, it's best when you're building your credit, you should not use trade lines that are not familiar to you, unless it's a close, like your husband or your
Right,
mom.
unless that's the only way you can leave a trade line on when
Line.
purchasing a home, is if it's a close relative, and you will have to prove your relationship with them. You're going to have to prove it with a birth certificate, um a marriage certificate, something legal you're going to have to prove that relationship to that person, and you're going to have to actually show that you know that person. Because like I said, there are specific guidelines for trade lines, and we will make you remove them. And once those trade lines are removed, then you remove all of that history, and your credit score could put you at the potential of not being able to purchase that home.
Yeah, that's a big risk. A lot of people don't even look at it. You have to look at the debt to income ratio, where a lot of
Hmm.
people, when they purchasing these trade lines, they don't utilize that. They just more so they want to buy the trade line and boost their score. And it would honestly do more harm than good when you do that, especially when you're not familiar on knowing how to read your credit report, knowing how much debt you can actually have on your credit report that can honestly help you or hurt you. So, it all
And
plays a
those
big part
trade
of that.
lines, and when it comes to your utilization, calculating your debt to income ratio, those trade lines, those payments, it will be included in your utilization and calculating that debt to income ratio. And just imagine if you're purchasing a home and your debt to income ratios are tight,
Mhm.
now you have an additional $200-300, because these trade lines, they're not small, and the payments on them are not small either. So based upon that, it could definitely affect how much home you can afford also.
Yeah, that's a biggie. That's a real big one because, again, people are not
Hmm.
knowledgeable of that. You can't, have a band-aid fix. And you also have to remember during this process, you want to build on your own. It's not a 30, 60, 90-day, especially when you have goals into purchasing a home. It's just not about
Hmm.
the score. It's the overall DNA of the credit report. They want to know the insides. They want
Right.
to see the debt to income ratio. And to touch on that, like when people are getting their credit restored, rebuilt, repaired, however, a lot of times they only getting it removed off of the credit reports. um, it's more to that. And, people don't understand that it's not just those three. So let them know about the true scoring system and things like that and where it comes from.
Right. So, a lot of people, yeah. So when a lot of people do start the credit repair process, even a lot of companies that we're seeing, like your companies, uh, your FES or your Lexington Law, those companies, they are disputing your credit report. So they're disputing Equifax, Experian, and TransUnion. However, the information on those credit reports, or some of the information on those credit reports, they are coming from things like LexisNexis and other places. So it's more to it than just disputing on that end, but you're missing the LexisNexis. A lot and other reporting agencies, a lot of people are saying things will come off, but they go right back on.
They do. They do. And because of that, because you have to dispute, when you dispute through the credit bureaus, that's not the end stop. That's not the end goal. That's just a hump, to get to that point. But if you don't
Hmm.
dispute it at the gatekeeper, and we call him Jesus in the credit world, if it doesn't go through Jesus, it doesn't go through anybody. So you have to understand when you're going through these processes. That's why credit sweeps are illegal. That's why,
Mm.
improper use of trade line, credit privacy numbers, CPNs, all these things would do more injustice than justice. So when you dispute and you go through these processes with clients, you have to make sure at the end, once everything is off all the major credit bureaus, and it's definitely more than three, you have to make sure you also dispute through LexisNexis. So that's so important, so important. And that's a practice that I'm very, aware of, because again, you will
Right.
fail a client, if, especially when they want to buy a home or, purchase a car and things like that. You have to make sure it's off of LexisNexis. It doesn't just stop at 3, 4, 5, 50 credit bureaus that we have out there. So,
Right. And a good example of that is if someone was to file bankruptcy. The bankruptcy, the state that you file it with, they're not the ones that place that bankruptcy on your credit report. It's actually a third party vendor that's reporting to the credit bureaus, taking care of that information up front or taking care of your credit report. And not only will they return to your credit report, like I said, it will definitely put a dent in you purchasing a home, and you could be at a position of losing thousands.
and I mean thousands of dollars. Like it's a
Mm-hmm.
lot. So, you know, again, guys, this is something that's really important, especially the ones that are in the process of buying a home, that want to render services through different agencies or individuals. Ensure when they dispute or they go through this process with you, make sure they are honestly not only restoring, rebuilding, but make sure all the actual bureaus are being notified of this processes, because if
Mm-hmm.
not, you're going to waste a lot of money and waste a lot of time. And that's why you see a lot of people when they go through that merry-go-round effect. They're like, well, I just got my credit. Somebody did a credit sweep, and somebody added CPN, and somebody, you can't do these practices. That's why the law is so important to implement when you're doing disputes, getting people ready for homes and things like that. So, it's,
And an, another thing that I wanted to mention, when you're purchasing a home, trust and believe it's a huge purchase. So we are going to do our due diligence. The underwriters are going to do their due diligence to make sure that it's a viable loan. So what there are additional things that we look for, like we pull a CAVRS report, and even if it's not on your credit report, it's going to show in there. The attorney, they get paid for looking for specific debts that are in your name. Because when you're buying a home, they don't want you to pick up an asset to be taken. And they definitely don't want any liens on their assets that they didn't approve. So when you're buying a home, you have to realize that if you don't handle it correctly or don't go through the credit repair process correctly, it's going to be found.
mhm. Yeah, and that's so important. So I, you know, in all honestly, just ensure when guys, when you're researching that type of, you know, the process to, render a service for as credit restoration and things like that, make sure you do your homework. It's so important. Make sure someone is not disputing just throwing the credit bureaus, because you lose your rights. Make sure that you have people that, if you have credit card debt, they're going to not tell you that I can eliminate your credit card debt. That's not how the
Mm-hmm.
practices work. That's how it would never work. Make sure you don't deal with people that deal with credit sweeps. If anybody offer trade lines and you have to purchase them, you don't want to deal with anybody that's going to take your social security number and control your actual livelihood with their spending. It can do more harm than ever good. So these are practices, you guys, that we want to share with you weekly, that, try to be aware, become knowledgeable of things like that. So, Lynn, do you have any thing you want to add regarding
Um,
credit, housing, real estate?
I think the most important thing to know is just um, purchasing a home is hard, but it's doable. And you don't have to be afraid of purchasing a home. You just have to make sure that we do it the right way the first
Mhm.
time to make sure that your investment is solid and that we're not putting you in any type of jeopardy um, legally, because some of the things that are done through the credit repair companies are also illegal. Um, and that's not even a side that we touched on. But purchasing a home it's not hard. You just have to do it right and make sure you get with a professional if you need credit repair that knows how to properly do it.
Yeah, that's extremely important. You have to know the ins and outs of this industry alone. You know, it's already tainted. So you need to find somebody that's trustworthy, make sure they know what they're doing um, when it comes to this processes. I like to open the floor to want to ask questions about real estate credit that's in the process, of buying a home. This is a time that is free. You don't have to follow up or, be, you know, ask all the questions, shoot away. Let me see who's out here. Everybody is, let's see. Don't be quiet on me, y'all. Come on. Y'all can ask a question or 10. We're here. Oh, so we have a couple people on tonight. Any questions, concerns, real estate, credit cards, school loans, repossessions, evictions, foreclosure, short sales, silent second. Oh yeah, that's a touchy one right there. What's going on in the world of the silent second? I heard about this statement not too long ago about the silent second mortgage. You know, tell me a little bit about that if you don't mind.
So we run into a lot of silent seconds when people are doing like down payment assistance up front, or they are subordinating the loan that they have on their home with the second to be able to bring down their loan to value to get into the house. There are some individuals who truly need it, but then there are some individuals who use it as a tool to bring less to the table, and that's not always best. I'll tell anyone in the real estate industry, there is no such thing as a free lunch. So when it comes to these silent seconds, a lot of people don't realize that a lot of those programs come with stipulations. I know one program specifically here. Once you sell your home, you owe them 50% of the proceeds from your home.
Wow.
There's the NACA program. They put 25,000 on a 25,000 silent second on your home. So if you're ever in a position to refinance or ever in a position to sell that home, you owe them that 25,000 right out of your proceeds.
Wow.
And yeah, so you'll never see the proceeds. The attorney will actually just cut them a check. So, a lot of times people, when you purchase your first home, it's your starter home. And you can use those funds to either, reinvest into your next home or do something different. However, what a lot of people are running into that are accepting these silent seconds to down payment assistance program is not knowing the ins and outs of the programs. So when you
Mm,
get ready to sell the home and you're looking for those proceeds to go towards the next home, you don't have what you're expecting to have because you're taking that second. And I'll give you an example. Just in April, we had a closing. The seller was expecting to net about, I think he was netting right at about 20 something thousand. Well, 9,000 had to go to the program that he had used to get into the home. He had been in the home for quite some time and thought it was fully forgiven. It wasn't.
oh, so wait a minute. It has to be a forgiving period in order to retain the funds when it comes to a
Well,
silent second?
sometimes there are, it just depends on which program you're going with. Sometimes there are programs that will make it forgivable. But for those programs, you're going to pay for that in the rate. So there's, like I said, there's a rate you're going to get, you're going to have to pay it back at closing, or you're going to have a monthly payment on it.
Okay. So for people out there that might want to know the term of the silent second, it's a second mortgage. You can either get it at the beginning of your home or modify your loan payments while you're in the home. Is that correct?
Right. So there are some programs that will allow you to modify your payment um, while programs that allow you to modify the payment while you're in the home. That's going to be the program that you're probably going to go through a situation where either your home is upside down, you need to take out some money in the home, you've taken out a HELOC, something you've done to modify your original home loan and add a second onto it.
Now, would they make you aware of it? Is it something that you are aware, like that, like far as a signature, like you sign
Oh
a
yeah,
promissory note? So
you're
you're not
definitely aware of
unaware.
it. You're going to an attorney's office.
So
No,
that's the only way
so
you're gonna.
in the state of Georgia, all of our transactions are handled at an attorney's location. So you are fully aware. And any other state have title representation. And you have to have, because before you can even get a second on the home, modify your loan or anything, you have to have a second. You're going to have to go through a title company. A title company is going to make sure that the home is free and clear of any additional liens anyway, because nobody's going to give you a subordinate second. So a lot of
Oh,
people
so
won't
it's the whole
subordinate the second.
process.
Some people will. It's a whole process.
Wow, that's interesting. That's interesting. Because a lot of people, they get these second mortgages and they not aware, what they're signing, or they're
There's
not
no way you can get a
aware.
second and not be
So,
aware.
so you will be aware of the silent second. It doesn't matter how
Yeah,
it goes.
you're definitely aware. Yes.
Oh, wow. Okay. Okay. Well, that's interesting. I mean, that's a topic that I'm trying to get more information on regarding that. For the simple fact, I'm involved in a couple of what do you call that, clients as we speak. So I want to get some, the more information I get, the better I can feel as far as moving forward with
Hmm.
this. So, do anybody have any questions as far as credit real estate? If anybody is in a home at this time and they want to, you know, maybe want to take out a second, you know, how you fix up your home and everything, and they take out equity and things like that. Anybody want to ask questions regarding that? The king is definitely here. So this is an honor, man. So, you know, this is a big honor. Hi, everybody that's tuning in right now. I'm here with Linnell King Edwards. She is one of the biggest realtors in the ATL. Greatly appreciated. Loan officers, correct, in the
Hmm.
ATL. And, she's joining me tonight, to answer any questions regarding mortgage. And I'm here also for credit. So if you guys have any questions, please feel free to ask the questions while we're on the live. It will be very grateful and beneficial for you because, one, you'll gain some knowledge and you can also spread knowledge to others. And for two, it's free. It's best to answer, get all the questions you ask. While you're free. Hi, Monica. We got some people coming on. Wanda, Tanya, it's a whole bunch of my good old buddies that are tuning in tonight. Any questions? It's six. What is it? What? Oh, it's 7:35 my time. Any questions, guys? Going once, going twice. All right, Miss Lynn. It's been a pleasure. You see somebody's typing.
Yes, well, I just want to say thank you so much for inviting me, and I have definitely learned a lot over our conversations from you regarding credit. As they say, I know that sometimes people say it's you can't teach an old dog new tricks, but I have definitely learned some new tricks from you.
Oh, thank you.
So, thank you so much for everything.
I appreciate it. I appreciate you as well. It's very knowledgeable to have someone to be connected with you that's in a different realm, but we have a lot of familiar, as far as, getting people in the homes and, them restoring their credit and different methods to doing that to ensure it's done correctly. So it's an honor to, be in your presence regarding this and having you being able to do this live with me. I have one person have a question really quick. Candice, go ahead and shoot your question, dear. She must be typing. Everybody tag, like, share this live. Are VA loans worth it? All right, Candice, that's definitely a question for you.
Oh my God, are VA loans worth it? Girl, yes. I have a VA loan myself on my home. So VA loans are definitely worth it. With VA loans, you don't have to have a down payment. There's no mortgage insurance on the home. And depending on the status of the veteran, you may be able to waive the upfront fee that's charged by the VA. So yes, VA loans are definitely worth it. They can be a little bit more tedious when it comes to an appraisal. They can be a little bit more tedious when it comes to some of the underwriting things. But I mean, it's really standard because it's a government loan. It's backed by the VA. However, with VA loans, you can have a 500 credit score and still get approved for a VA loan.
Wow.
Yeah. So VA loans are definitely worth it.
Wow, that's interesting to know. Oh my,
Yeah.
that's really good to know. Wow.
Yeah,
So,
with VA, VA doesn't have a minimum credit score. The lenders place an overlay on the VA to give you a minimum credit score, but VA does not have a minimum credit score for their program.
wow, okay. She said, what are the interest rates? What about the interest rates as far as the VA loans?
So I cannot quote an interest rate, but what I can tell you is that um, because for compliance reasons, but interest rates right now are ranging and they are super, super low. The VA loans are interest rates are going to run about the same as a FHA interest rate. And if she wants to inbox me more, I can definitely work up a rate for her and tell her what her exact rate would be. But I just can't quote it over live due to TRID, and I'm a professional and I'm not going to lose my license.
I know that's right. Well, Candace, you can hit up Miss Linnell. That's good. That's some good information because I know a lot of people in the military, that are interested in the VA programs when building a home. I'm never sure, and I can never answer those questions because I don't know. But connecting with you and other individuals, it makes this more, exciting to learn about. So, please, I will give you her info. She's tagged on the live there, so give her your info, and then you guys can, link up and ask the questions regarding VA loans, or is it okay if they ask them about any loans? Or are you not familiar with some loans?
Oh,
Or are you
yeah, you
familiar with?
can ask about any loans,
Okay,
because we do them all.
okay. So guys, please hit up Linnell. She's definitely a friend of mine, and she's in the group Black Girls Have Good Credit too. If you're not in that group, please join. You don't have to be a woman to join. Men are also in the group as well. So look up Linnell. She will be available. Any questions about credit? I wanted to go longer, Linnell, but I know you gave me, like you said, you have like certain minutes.
No, we're fine. We're fine. We're fine.
I want to answer a lot of questions for people. I want people to ask questions. I want people to engage. I want people to, not be afraid of this knowledge, just, ask the questions. If you have any issues regarding anything, ask the questions while we're on. This is what we're here for.
So I think this is a question that I will ask that comes up a lot in my sessions where I'm helping people with, with getting approved and all of that stuff. A lot of times people will say, "Oh, I had a collection and it's 10 years old." But can you talk about how, like an old account, how it still can affect your credit score today?
Well, an old account, anything over 7 years, technically supposed to fall off by the law, but I've seen accounts on people credit reports that are 15, 16, 20 years old. When it comes to collections, it varies on the scorecard when it's being calculated. Anytime the original creditor sell the debt and it's in the hands of the collections, you must ensure before you pay it, call the company and ask would they remove the entire trade line off your credit. The entire collection must come off. Because if you don't ask that question and you pay it, it will say zero. But however, since it's in a category collections, FICO was still generated as negative. So it won't make an impact on your credit score. It can actually harm your credit score more because they still can go by the guidelines of reporting it for 7 to 10 or years longer, even though you paid the debt. So when you're removing a collection, you must ask, are you going to remove the entire trade line before you pay it? And ensure you get something in writing. Because if you don't, they pay it, you pay it, it goes to zero, but it can continue, to, give a negative feedback on your credit. So that would be my, answer to that. Always, always call the collection agency and ask them to remove it prior to paying it. And if not, make sure that, you go about another way of getting it removed. And that's called disputing it. That's what I would do. It says, how can you remove a repossession? It depends on what state you're in. Repossessions are tricky because it depends on which state you're in, how, when it was a voluntary repossession. So what made it voluntary? Was it not working? Was it like it was having more repair issues? Was it more so a burden as far as the interest rate? Did it have safety issues? All those areas need to be answered. What was wrong with the car? So when it comes to repossessions, there's ways to remove the repossession. So when a car is repossessed, I can contest to that because I've had a repossession. If by law, if you get a repossession, you don't get any information back from the actual disposition, meaning when they disposed the car and resold it, that's against the law. You can get the repossession removed. If you had a voluntary repossession and it has safety issues on the vehicle and you wasn't notified of those safety issues, that can also be removed due to the National Highway Safety Patrol. You always have to always know which state you're in when you're doing a repossession. And it's a lot of reasons that will always, go with the laws, far as a repossession. So you have to know what is what. So it's basically, in so many words, if the car had damage, if the car had damage, or it was like if it was an engine or it was a recall, things like that, you can get the repossession removed. So there are some of the ways you can get the repossession removed. She's saying my sister sent it back when she moved to Korea. You're going to definitely have to inbox me because it's going to it's going to have to be some laws with that. I can almost promise you for that. She said, what score is needed for conventional loan? That's definitely a question for you, Lynn.
So a 620 is the minimum score for a conventional loan, but conventional scorecards are different from FHA, and their approval system is different from FHA. But to answer your question, a minimum credit score of 620, and with conventional, your credit report and what's on your credit report is heavily looked at.
Is it different with a conventional loan?
Conventional loans are not backed by the government. So you basically have four different agency types of loans. You have your conventional, you have your FHA, you have your VA, and you have your USDA. FHA, VA, and USDA, all three of those are backed by the government. Conventional is not backed by the government. So should you default on that loan, the company runs the risk of runs a greater loss mitigation risk, I should say,
Okay.
on a conventional loan than they would with any other loan that's backed by the government.
Okay. That was good. I was good to know. I never knew that. Well, wow, what? I'm not in real estate. I would never do nothing like that. So any other questions? Let's see. Sean's on. Good. Sean, I should bring you on with your crazy self. Thank you, Jasmine. Any questions about anything critical? Anybody that have student loans, y'all better send that information in while COVID is going on. They're doing a lot of they're doing a lot with school loans right now. They're forgiving a whole lot of school loans
Yeah,
right now. They're doing a lot. I
I need some
wish
of
they
mine
forget about.
forgiven.
I need some of mine to forget about. Yeah, just act like I never even had them. It's what I would like. But, you know,
Exactly.
anything like that. Well, thank you, Jasmine. The head honcho was in the building. Good old Jasmine Patton, the head honcho. The difference between a Fico and Vantage score. Oh, this is always one of my favorites. Vantage scores have a big thing. The reason a Vantage score will be higher in scoring because the payment history alone starts off with 41%, whereas FICO starts off at 35%. So you always have to understand, in the world of credit being extended to you, many places don't even look at a Vantage score. Am I correct?
We don't look
Score.
at a Vantage score. We are directly FICOs.
Yeah, a lot of people are FICOs. I think 99% of the United States and the world period is FICO. Um, Areas like, platforms like Credit Karma, Credit Sesame, all those that hold FICO, Vantage scorecards, you should never go off of the scoring because it's not going to get you approved for anything. There's nothing wrong with it. However, it's more of a visual. When it comes to, plus loans, my cousin, hey, Sharana, she wants to know about the plus loans, student loans. Parent and plus loans are more personal. I don't know if the government is forgiving them as easily as the federal ones, but I know you can go on a deferment and get the payments pushed back due to what's going on right now. Please send your information in because I know you have like 3 college kids and they all probably have loans, and get that so it won't affect your credit, because if that starts to tarnish your credit, you can drop scores by almost 100 or more. So you don't want that on your credit. So, call in and let them know that, due to COVID, that you want to be put on a deferment until, COVID is over. The kids are out of school right now. So take advantage of all the, funds and, all the forgiveness that they're giving right now. Please call in and make your situation known. Don't just think because they're doing it, they're going to just forgive your actual loans. You have to call in and request deferments and things like that. So that's a good question about parent plus loans. So someone for a conventional loan, are they protected during the pandemic? Oh, that's a good one.
So
It will be that
it's
strong,
going to
wasn't
boil
it?
down to who you start. It's going to boil down to who your loan is with. So the reason why FHA, VA, or USDA would be a little bit more protected what than what a conventional loan would be is because, like I said, they're backed by the government. So the servicers that they're attached to are putting out specific things. So when you see things being put out, they're specifically being put out by the agency. And there are some protections that are there for people with conventional loans during this pandemic, because Fannie Mae as well as Freddie Mac have made some adjustments.
That's good.
Yeah, and we've seen some adjustments in some of the underwriting guidelines from some of the lenders, but not a lot of adjustments.
So let me ask you a quick question, Lynn. Why did they increase the actual, you know, the credit scores? Because back then it would be a 620 you would need to get a home. Now they're saying it's like 7 something. Is that true? Like a 720? Did they go up? Is that not true?
So
Okay.
no, they didn't go
So,
up. The specific lender went up.
so it had nothing to do with the government.
So had nothing to do with the government. So because a lot of people don't know, with FHA, you can purchase a home. You can have a 500 score and purchase a home with FHA with 10% down. That still holds true today. You're just going to pay a tad bit more money to purchase a home at a lower credit score, or you may have a longer wait to purchase a home at a lower credit score than you would if you had a higher credit score, if you had money in the bank and you were an A+ client. But credit scores have not changed. Particular lenders have changed their guidelines and how
Got
they
it.
lend. And the reason they did that is because we saw so much fluctuation in the market due to COVID-19. The mortgage-backed securities, they were being affected. They weren't being sold as much. Fannie Mae, and they were coming out and saying that, I'm sorry, not Fannie Mae, but Ginnie Mae and different servicers were coming out saying they weren't taking on any new loans. So that left the lender to be susceptible to a lot more than what they could handle and what they were used to, by not having those servicers in place to purchase the loans like they did before. So because of that, they wanted to see a more healthy buyer than they saw before. And some of them just decreased their appetite for a lower credit score buyer. But there are still programs that are out there that will allow you to purchase with a lower credit score.
I'll snap my cat. Give me 1 second. Will you move? My cat is in my wires. She's a move. Sorry about that. She's up here chewing on my wires. She's so crazy. Oh, simple cat. Sorry, guys. My cat is she's a little extra. She wants to chew on wires and things like that. So, but anybody have any questions? There were some good questions. Thank you for bringing those forth, because a lot of people don't understand. You definitely have to call in for things like that. 524, what if a person is authorized user on 5 different accounts and then you decide to go for a chase? Why would they still consider this as a 524 even though you're an authorized user? Because Sean, it's always Sean, Lynn. It's always Sean. Oh my God. This is why. If you're an authorized user, meaning it's not your account, and you go for a chase card, which I was declined on a personal side, and I still take this personal to this day. Anyway, you cannot add yourself as an authorized user on a card that's not yours. Chase is one of the most critical ones of them all. So, Sean laughing, of them
Sean
all.
is with the setup.
This is the setup right here. So 5 to 24, meaning you cannot apply for 5 cards within a 24-month period. So when you go, when Chase is someone, yes, you have to have an exceptional credit score. However, they also look at the overall credit report. So if they see you are adding 5 accounts as an authorized user in a 24-month period, they will decline you. They got me in a personal, but I got their asses on that good old business side. I promise you, I got in anyway. It made me no difference. I was getting there. Y'all was letting me in. I would mean that. I was hot with them. They denied me. I slid clean on the floor. And then called them 3 times like it was going to change. I called, hello. This is what enough y'all want to reconsider. Nerd Wallet told me I was ready. So I'm applying now because I'm ready. And he said, oh, it's the 5 to 24. And I'm like, I didn't apply for nothing. They said, oh, you got increases on your credit limits. So what does it do with me? I didn't do it. They did. He was like, well, you're disqualified for 2 more years. Oh, I got a social. That's fine, but I definitely will hit you with this EIN number. So that was an experience. So the actual 5 to 24 is so important. If you preparing yourself for a Chase Sapphire Preferred card, please make sure it doesn't matter if the creditor that you're with, if they extend lines of credit for as increases, you fall within that 5 to 24, guess what? They will deny you. And it doesn't matter. There's no bending with Chase at all. So since they didn't let me in the front door, I went around back, all the way around back. I'm still here. Y'all gonna let me in, I gotta get in. So it makes me no difference. So that's just
one way or another.
I'm getting in, and I meant a minute. So yeah, that's a big thing with credit cards. When you go higher up the rank, American Express, Blue Card, the Platinum, Citibanks, they're bigger and they're higher in cards. They go heavy on that 5 to 24, and you can have a perfect credit score and get disqualified for it. It is a known fact. They don't bend for them at all. So when you're getting credit and you want those higher credit limits, when you get to a certain part, lock your credit reports. Increases if your credit reports are locked. So your creditors can't access your file and then give you increases. So that's something very important that when you're building and you want to go to that next level. So that's something I didn't do. Again, I was denied, but there were other ways. So any questions, everybody? Any questions? Going once, going twice. Are we at 7 o'clock, 8 o'clock?
Are we?
Yeah.
Almost.
Yeah, we almost there. 8 o'clock. Guys, it's been a pleasure. I love when y'all join, tune in and get this knowledge. I will be back next week with another co-host. Don't know yet, but it was a pleasure. Lynn, thank you. Royalty.
No, thank you so much for the opportunity.
Yeah. Keep on spreading that good old knowledge, and I greatly appreciate it. Anybody want to know about credit, Please join the group. Black girls have good credit too. Men and women are within the group. It is an excellent group. You will get a lot of free knowledge. Please, please, please join. Send the request over. Get in, get the knowledge. It's free and be a blessing. Again, build your credit, do it the right way. To know about real estate, go see Miss Lynn. Thank you, everyone. You take care and have a good day.
Have a
Period.
good night.